Hey, Dan Fitzpatrick here. It's the Monday before Thanksgiving. I don't know about you, but the way this market's been over the last month and a half or so, I'm really looking forward to just sitting down with a bird and eating it. Okay, I want to look at Facebook today, and here's why. I want to save you from yourself. There are a lot of traders, particularly the newer kind, that would look at this and think, well, this is Facebook. It's you got to be able to buy it here. My gosh, just a month ago it was up above 200. Now it's down to 130. It can't go down forever. The news is just so horrible that isn't it time to buy? Don't you want to buy when there's blood in the streets? And I think, generally speaking, you could say that that's a good idea. I just don't think it's a good idea here. And this is why. I won't do any editorializing about the scumbergs and all that. I've never been a Facebook guy. Anybody who's followed me knows that. And so I'm just so kind of surprised actually that people caught on, because typically they don't do that, especially with somebody, some people like this. But anyway, I want to look at the fundamentals, and this is my contention. Most people think that as a stock falls, it gets cheaper. The PE gets better. It gets cheaper, and you got to buy it. If you liked it at 150, you got to love it at 130. But I want to explain to you that that's actually not the case. So we're going to look at MarketSmith here. And this is an IBD product. I really like MarketSmith. The actual platform itself is a little bit slow, but I'm not going to gripe about it because I learned to make a lot of money off of the data here. But I want to point something out to you. Look at these numbers down here. Okay, earnings and sales. This is the growth of a particular quarter, and again, earnings on top, sales on the bottom, over the same quarter the prior year. So in other words, like back here, the quarter ended 2017, the fourth quarter. What is the earnings and revenue growth versus the same quarter that ended in 2016? And then similarly here, the first quarter of 2018 ended March 31st. What does that compare to versus the same quarter in 2017? So we're looking 1 year back. And these numbers look pretty stellar here. Earnings growth, my gosh, 83% versus the same quarter the prior year. And then 63% the following quarter versus that same quarter the prior year. That's still pretty good. And then 32%. Well, crap, that's still pretty good too. And 11%, still pretty good. 11% earnings growth versus September 30th, 2017. Similarly, in sales, their revenues, 47%. This is 47% growth over the same quarter the prior year. 49%, well, that would be better, wouldn't it? That's pretty awesome. And then 42%, hey, so we've got 3 quarters in a row of sales growth of over 40% versus the same quarter the prior year. This is a company that looks really strong. For crying out loud, who wouldn't want to be in this company? And then finally, this most recent quarter, the sales or revenues are up 33% versus the quarter ended September 30th, 2017. So these are all smoking hot numbers until you start looking at the trajectory here. Earnings growth, 83%, 63, 32, 11. What does this look like? It looks like a downtrending chart. Similarly with revenues, 47, 49, 42, 33. So we'll go here, and then this is looking like this too. So here's the point though. The market looks forward, not behind. It's fine, all of this stuff, great. Yippee-ki-yay. 83% a year ago. Wonderful. Not even what have you done for me lately, but what are you going to do next? And in order to get that, we have to see what has happened before and what the trend is. And if you look here under earnings per share estimates for 2018, 20% earnings growth. Okay? For 2019, 1% earnings growth. 1%. Imagine that. That is a 95% deceleration. PE 19, great. It's just a little bit over the S&P, the average S&P stock. How about this growth rate? 78%. Well, that's 78% average over the last 3 to 5 years. Using like a mean reversion, the sum of least blah, 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 and all that. Bottom line is over the last 3 to 5 years, the growth rate is 78%, which is pretty smoking hot. Until you look at this line evidencing earnings and this line evidencing sales and this number and this number. So you can expect over the next year that this growth rate of 78% will start being averaged down. And the market looks for stocks of companies with growth rates that are going the other way, that are going up like this, not down. And so Facebook is one of those stocks that I would say if you own this stock, you don't even, you either don't understand how the market works, how investors truly invest, where they look forward, not behind, or you just have a love for Facebook, or maybe a lack of imagination, or just not much experience. But here's something that I want to tell you. This stock at 131 is not cheap. There's nothing that says that this stock can't ultimately fall to $100. It was there just a couple years ago when growth was so awesome, but after all the things that have happened, I think that there's probably not going to be a huge growth rate going forward. Again, I'm not a Facebook guy. Everybody knows that. I'm just saying there are more and more people like me that don't like what Marky and Cheryl do, and they're kind of voting with their cyber feet and moving elsewhere, and you're going to be seeing that in the numbers. I do not believe that it is too late to sell Facebook. At some point, the stock's going to rally just because it's so oversold, and then you're going to say, well, see, Dan, you're an idiot. You told me to sell at the bottom. Not what I'm doing. This stock, just like any of the other stocks, can be zigzagging upward on an oversold bounce. I'm just talking about the fundamentals of the company, which are deteriorating. The stock, which looks about as ugly as a stock can look, while still having more room for the downside. So just don't go there. If you're looking for oversold bounces, definitely keep this on your screen as a candidate. But if you're looking for some place to park your money to ride through this, this ain't it. I'm just telling you. Okay, members, over to the strategy session. A lot of stuff to go over tonight.